Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 331 on July the 12th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Nikola Corporation, Macy's, and Palantir Technologies. And we discuss three new trades on Lucid Group Inc., Ford Motor Company, and the VanEck Junior Gold Miners ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, we have once again closed at all-time highs. We even reached 40,000 in the Dow, which is huge. The Dow Jones Industrial Average grew 625 points this week, closing at 40,000 points. The S&P 500 index picked up 48 points, ending the week at 5,615 points. And now it's time for the topic of the week. The topic of the week is making the complex simple. Recently, I was at dinner with a good friend of mine who asked for my opinion on a situation that he's going through. Now, I'm always happy to help a friend, so I asked what was going on. He gave me the whole scenario and then expressed how he was trying to decide the right thing to do. The problem is that the scenario was super complex with a couple of interconnected situations and a large amount of emotion on the overall outcome. The complexity was making it hard to see a clear path out. Now, in my life, most of the complexity occurs when I have stacked 2 or 3 situations on top of each other. I've taught myself to unstack the problem and deal with each component on its own. Suddenly, the complex situation is simply 3 or 4 simple situations, and I can gain clarity on the entire problem. So what does that have to do with option trading? Well, I suggest using that same process when it comes to analyzing your trades. Some of you have truly complex positions on, with credit spreads and debit spreads and ratio spreads and straddles and strangles and all sorts of things going on. For some of you, a single spread or even a covered call position is complex enough. Regardless of the amount of complexity in your position, remember that every trade can be broken down into its components. If I have a butterfly spread, there are 4 individual options that define my profit and loss. All I have to do is break down the spread and look at what is happening to each of those options at expiration. It makes it far more simple each time I do it. And after time, when you've had enough experience, even the complex trades won't seem so complex anymore. Until then, don't be afraid to break them all the way down to each individual option, each component, and do the math on what is happening to each option in the trade. This will help you understand options even better, and it will minimize the likelihood of you making a mistake that costs you money. Don't be afraid to break down the complex into the simple components in order to gain clarity in a situation. So that's it for the topic of the week. Let's get into the review of last week's trades. Now, we'll start off with our covered call on Nikola Corporation, symbol N as in November, K as in Kilo, L as in Lima, A as in Alpha. At the time, the stock was trading for $8.99 per share. I looked at buying stock and selling the July 9 call at 97 cents, hoping for a return of 10.9% in 2 weeks. Well, shares of Nikola Corporation gained 99 cents, ending the week at $9.98 per share. The call option that we sold gained 44 cents, leaving us with a net gain of 55 cents if we were to close the trade out immediately. Now, with stock above $9 per share, we stand to make 98 cents, or that's the 10.9% return on this trade at expiration. This trade worked out so far, and there's only 1 week left before expiration, so no adjustments are needed on this one at all. just always make sure you track the stock just in case you get a big move before expiration on Friday. Next up, we have a credit spread on Macy's, symbol M as in Mike. At the time, the stock was trading for $19.63 per share. I looked at selling the July 19 put spread at 18 cents, which could give us a maximum possible loss of 32 cents per spread. Well, Macy's shares lost 53 cents, ending the week at $19.10 per share. The out-of-the-money put spread that we sold is now at the money. The stock price is 22 cents below our break-even point, so you're perfectly justified to make an adjustment. Now, you can sell the July 19.5-20 call spread and collect 10 cents. That lowers your maximum possible loss down from 32 cents to 22 cents, but it also increases the likelihood of losing that 22 cents. If stock doesn't expire right at $19.50 per share, you will have a loss to contend with on either the call or the put spread. That's not the best option for me. I could pay 77 cents for the July 2019 put spread. This would leave me long the July 2019 half put spread, but I will have paid 59 cents for it, guaranteeing either a 9-cent loss on the trade or possibly a 59-cent loss on the trade. Or I could do nothing and see if the stock decides to increase over the next few days. Given these scenarios, I'd lean towards the last option rather than create a scenario where the adjustment either increases the risk of the trade or it increases the likelihood of that loss. This is why I always say make sure you do the math on all of these adjustments just to make sure, A, that you understand the risk that's going on, and B, make sure you know whether you are adding to your risk or decreasing risk. It's very important. And our final trade from last week was a debit spread on Palantir Technologies, symbol P as in Papa, L as in Lima, T as in Tango, R as in Romeo. At the time, the stock was trading for $27.22 per share. I looked at buying the July 26.5-27 call spread for 30 cents, giving us a maximum gain of 20 cents, or that would be a 66.67% return in 2 weeks. Well, shares of Palantir rose 84 cents, ending the week at $28.06 per share. That in-the-money call spread that we bought is now even more in the money. The spread can actually be sold for a meager 6-cent gain, or with stock well above our break-even point, we can look to lock in the roughly 67% return in 5 days from now at expiration. So no adjustments are needed on this one as well. We had 2 winners, 1 loss. I'm hoping the winners stay winners, and I'm hoping that loss, the one in the middle on Macy's, I'm hoping that one comes on back up and that the stock makes me happy. Either way, we at least enter trades that have a limited amount of risk and a gain that would be known right from the start. That's what I love about trading spreads. Now, we're 5 days away from the July 19th expiration for monthly options in July. All new trades on today's show will use the August 16th expiration for monthly options in August. Now, we'll start off with the covered call on Lucid Group Inc., symbol L as in Lima, C as in Charlie, I as in India, D as in Delta. The stock ended the week at $4.25 per share. I'm looking at buying stock and selling the August 4.5 call at 51 cents, hoping for a return of 17.88% in 5 weeks. Now, you enter this trade by buying stock for $4.25 per share and selling the August 4.5 call at 51 cents. This trade makes the most money if stock prices finish above $4.50 per share. The break-even price on this trade is $3.74 per share, and in real terms, the stock purchase will require $425, and you'll collect $51 for selling the option. Next up, we have a credit spread on Ford Motor Company, symbol F as in Foxtrot. Stock ended the week at $14.01 per share. I'm looking at selling the August 14-13 put spread at 35 cents, which could give us a maximum possible loss of 65 cents per spread. Now, you enter this trade by selling the August 14 put at 58 cents and concurrently buying the August 13 put for 23 cents. This is a credit spread because we're selling the spread And this trade makes the most money if stock prices expire above $14 per share. The break-even price on this trade is $13.65 per share. In real terms, you'll receive $35 per spread that you sell and have $65 at risk. And our final trade on the week is going to be a debit spread on the VanEck Junior Gold Miners ETF. Symbol G as in golf, D as in Delta, X as in X-ray, J as in Juliet. Stock ended the week at $47.59 per share. I'm looking at buying the August 46.47 call spread for 64 cents. That could give us a maximum gain of 36 cents, or that would be a 56.25% return in 5 weeks. Now you enter this trade by buying the August 46 call for $2.92 and concurrently selling the August 47 call at $2.28. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $47 per share. The break-even price on this trade is $46.64 per share, and in real terms, you'll pay $64 to enter the spread, and your maximum gain is $36 per spread. So that's it for this week's show. Thank you guys so much for listening. I've gotten some great emails, great questions via email each of the last few weeks. You guys are just awesome. I've got the best fans. Hey, in the coming weeks, I'm going to be opening up a Facebook group as well. I'm also going to be expanding a few things on YouTube, on Instagram, and on a couple other platforms. So, hey, it's summertime. You might as well grow a little bit during off season. I always look at summer like off season. This is the time to get stronger and get better, because as soon as September comes, the volume and volatility typically comes back to the market, and it'll be time to focus in and finish the year up strong. So hope you guys are having a great summer. Hope you've got a wonderful weekend planned. Thank you so much for listening to the show. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.